Hello fellow traders, one more episode of this series on how to build your own trading system, your own trading strategy. Stay tuned as I will give away as a gift the profits from my real account for the purposes of this video to my subscribers. Now, today we will analyze the RSI indicator, relative strong index. I would like to say relatively, but let's keep to that definition and we will see what are the pros, what are the cons of this indicator. It's another lagging indicator. I will cover all the indicators in this series, so stay tuned. If you have any suggestions, if you want something that you want special, you can leave a comment. What are the pros, what are the cons of this indicator? We will go with live examples. Now, let's go to the definition. RSI, by definition, stands for Relative Strong Index. For people who like to see the formula behind it, you don't have to memorize, you don't have to remember it. It will automatically be plotted in every diagram. Every platform has the RSI. You don't have to remember it. It's a very, very, very popular indicator. The RSI calculates using the average changes in prices. Let's say in a given period. The RSI calculates the average price gains and losses over a period of time. Is not something that you have to remember by heart. I know that you won't remember this formula. There is no reason. I just know you to understand what is RSI and how it is working. The period is up to us. By default, the period of indicator is 14, but as I've said in many of my videos, you can become more creative. Many people change the period into 7, representing in a daily chart 7 days of the week, and this give a more fair representation, if we could call it like this. The default time period of this indicator is 14. But as I said, you can do many changes. The main difference with the MACD, the indicator that we have already analyzed, it measures the relationship between the difference of two MAs, the 12 and the 26. You can also check, I have also covered this indicator in another video. RSI measures the price changes in relation to recent price, highs and lows. How recent? This depends from you. By default, the period is 14. 14 ups, 14 downs. I will go right away in a chart. We will see the indicator in action. Let me switch. I will open my MT4 platform. I have opened the Euro USD. I have already plotted the indicator, and let's see some of the specifications. The indicator comes from the end of 1970s, 1978 to be precise. It's another holy grail at that time. It comes from G. Weld Wilder in his book New Concept of Technical Trading. It's considered a must in trading. The indicator has several levels, and you can add them also for your convenience. By default, the indicator has two levels, 30 and 70. In this example, I have inserted two of them with difference in period. The one is with a period of 14 and the other one is with a period of 60. This is just to show you the difference when you are changing and you are adding a period. The smaller the period, the choppier the indicator becomes. The bigger the period, the smoother it becomes and tends to go to the 50s, because if you are analyzing a bit of the math behind it, you will understand that as you increase the period, it tends to become smoother and smoother. So a very simple strategy is use the term overbought and oversold. The most popular method to trade with the RSI is by using divergence. Remember, the indicator measures the momentum of the market at a given period. At this point, we have a live example in cable. I'm already short with my real account. For the purposes of this series, I will trade only with this account. I have already explained the reason. And now let's see what are divergence in a live example. We see that the prices at this point does higher highs. So at this point the market is moving up. Now here comes the RSI and the key factor of this indicator. And what are the divergence? We see that even though the prices shoot higher, in the indicator it's exactly the opposite. The prices are keep moving in a lower rate. They are doing lower highs. So they are opposite. The real market goes up, but the momentum of the market is exactly the opposite. It's showing us exactly the opposite. And this is the most powerful key point of RSI indicator. Trade by using divergence. And the divergence will work even if you are using different time frames. And this is also a very powerful tool. I have already opened here an RSI with a 16 period and the RSI with 25 period, and as you can see, the divergence are obvious in both of these periods, even though they have a difference between them. So by using this method, the divergence, of course you understand that you can use it on the opposite way. I mean, when the market is moving to the downside, we have also divergence there. So you can understand how powerful can that be, because it shows you that the market is running out of steam. And this, you can understand how powerful it is, that you can use it even in different periods with the same indicator. And at my opinion, even though I do not trade, I'm not using any indicators in my trading, you can see that it can be very useful. Now our fellow trader is ready. He knows how to use the moving averages, he watched our series, he knows how to use the MACD, he can use any fancy line that there is out there as an indicator. He's ready to make a profit. He did the adjustments in periods. He will outsmart any other traders out there and he will make some profit. He start using account size wisely because she watched our series. Now she knows how to take risk management seriously, and he's disciplined. Remember, a very common mistake we all do, and I'm including myself, when we are analyzing the market, we use the past and we try to make predictions in prices that already happened. Remember that the market is unpredictable and it will keep being unpredictable. No one knows for how long it will trend and no one knows for how long it will go sideways. I have opened randomly in daily chart the fiber to see if our fellow trader can beat the market with his new toy. Remember, I'm using it randomly. It's good to back test your strategy before applying it into a real account. I have used for these purposes the simple MA. I just used the 150 to show you the difference and how you can combine a couple more information, let's say. Now our fellow trader, he will use the signals. So at this point he will buy and see that the market is in his favor. He's making some profits, he's booking some profits, he's feel very lucky. At this point he will start sell. he's already very confident because he won his first trade, or her, I don't know. Now look what happened. Our fellow here is keep buying based on the indicator signals, but the market is not in his favor. The market is shooting up, 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 up higher. Even though at this point he thinks that the market will reverse, but it didn't. The market keep going higher and higher. So the market will never run out of steam, but our fellow trader will run out of steam. And now to the opposite direction. At this point he will start selling. The market makes a move to his favor. He's feeling lucky. He booked some pips. But now see what's happening. He will keep buying, but the market will go against him in the opposite direction, and will keep losing pips and money and so on. So even at this point that he will start to open buy orders, even though the market is moving against him. Maybe at this point she will just use a sell order, and at this point a buy order. And look the simple MA, how it worked perfectly. A simple 150 MA that I just plot on my chart worked perfectly in predicting the trend of the market at this point. Remember, there is no perfect indicator. 150 MA it is not something that it's very common, yes, but it's not perfect. You still get wrong signals. But at the point of prediction of the trend, the MA is much more useful. And here comes the most negative aspect of the RSI indicator. RSI is not working when the markets are trending. It's very powerful to show you the momentum of a market. Keep an eye on the divergence. It's very important, very powerful. Most traders use this indicator just to recognize the momentum of the market and when the market will run out of steam. Do not use it as the only key and the only tool just to make a trading decision. Combine your knowledges, combine this indicator, and for example, when you are ready to take a short position or a long, it doesn't matter. Check also the indicator, and if you have a signal from there, did you see any divergence? Did you see that the market will start doing higher lows or higher or lower highs? Well, depends on what market of the site you will use. So this is the most negative aspect of the RSI indicator. It won't work when the markets are trending. It will work perfectly when the markets will go sideways, when the markets are lagging. Yes, at this point RSI will be very, very useful. But remember, there is no perfect indicator. You should it should come to your mind that you are speculators. You will never get the perfect trade. Sometimes you will win and sometimes you will lose. Losing is a part of the game. Trade safe, stay tuned, and I hope I'll see you in the future.